Well, hi, I'm Jared Snider, a partner and senior advisor at Exencial Wealth Advisors. And my team and I have the privilege of serving a lot of energy executives. And today's video is the first in a series called Energy Executives, Are You Ready for an Industry Exit? So really this video series is intended and targeted towards energy executives who are contemplating retirement, contemplating taking some sort of separation package. Maybe you're moving to another company, maybe you're changing industries completely. If that's you, this video series is for you to really help you be prepared for that industry exit, to know the actions that you need to take, the decisions that you need to make as you're preparing for that exit. Today's discussion is going to focus on the first step in being prepared, and that's having a net worth statement or a balance sheet. A net worth or balance sheet is a pretty critical tool whenever you're evaluating your overall finances, because it's a great way of helping you get organized. So this is really about foundational organization of your finances. So that balance sheet, that net worth statement, it's just a snapshot in time, if you will, of your financial universe, of all of the moving pieces, all of the assets and liabilities that you own. So I have 2 kids at home. I'm raising them in the era where we have smartphones everywhere we go. I have tons of pictures of them, as you can imagine, lots of snapshots in time of my children. That's all a balance sheet is. It's that snapshot in time. That net worth statement is that. And you may already have one, you may not, but let's talk about what a net worth statement should be, what information should be reflected there. So on your net worth statement, you're going to have your assets and you're going to have your liabilities, basically what you own and what you owe. And here's how I recommend organizing your net worth statement so that you're able to very quickly understand the moving pieces of your assets. First off, organize all of your cash equivalents. So your cash equivalents are bank accounts, money market accounts, CDs. List out each one and sum up those cash equivalents. Next, list out all your taxable investments, which would be TOD accounts, individual accounts, joint accounts, maybe a trust account. Those types of non-retirement account investment accounts would be your taxable accounts. List out each account and where they're custodied. Is it custodied at Fidelity, at Merrill Lynch, at Charles Schwab? List out those custodians so it's easy to organize that information, and then sum up the value of each of those accounts. Then move on to sum up both the cash equivalents and the taxable accounts together so you're able to see all your non-qualified assets in total. I would then move to your retirement assets. So organize all your retirement accounts. You may have worked here and there over the years and accumulated a number of 401k or retirement style accounts, IRAs. Organize all of those pre-style accounts together in a category. List out each one individually. List the balance. Do the same for any Roth dollars you have, any Roth accounts. And then sum up those retirement accounts. After you've summed those up, then move to accounts like life insurance policies. If you have cash value in some life insurance policies, be sure to reflect those policies. Maybe note the policy number if you have it, and note the cash value. Be sure to distinguish between cash value on your life insurance and the death benefit on life insurance. For your net worth statement, we're just focusing on the cash value of that life insurance policy. And then lastly, look at any annuities you may have. If you have some annuities, list out those annuities and list what the surrender value of those annuities would be today, and then reflect that and sum all those up. So you'll have your non-qualified assets, which are your cash and your taxable assets, and a sum amount there. And then you'll have all of your retirement assets summed up. You'll have your life insurance summed up. You'll have your annuities summed up. All of those added up together equals your total liquid assets. Once you've summed up your liquid assets, move to your illiquid assets, which would be things like real estate, your home, your vacation home, any other sort of real property, and sum up the value of those real property interests. Then list out any business interests you might have or other illiquid assets. If you want to list out personal property, things like vehicles or collections, art collections, jewelry, you can certainly do that. But once you've listed out all of those items, sum up all of the total of those assets, and that's your assets side. On the liabilities side, be sure and list out any long-term liabilities. Mortgages, second mortgages, HELOCs, car loans, business loans, personal loans. If you're carrying long-term credit card debt that you don't pay off at the end of each month, be sure and reflect all of those different pieces of long-term debt. And so we'll take our assets, the total of our assets, we'll take the total of our debt, subtract the debt from the assets, and that gives you your overall net worth. That's a great way of starting to get organized and being prepared for that exit from the energy industry. Next week, we're going to focus a little bit more on the next step from using that net worth statement to talk about those assets and liabilities and what do the cash flows on those assets and liabilities look like for you in the future. So join in with us next time. We'll talk a little bit about cash flows. If anything we've talked about here today piques an interest in you, or you need a sounding board on any of the things we've discussed here, be sure and feel free to reach out. My contact information is on the screen. We're glad to help. Have a great day.